Hey Brian, how you doing?
I'm doing well.
It's a pleasure to meet with you. I'm excited to talk to you a little bit about what we're doing here at AIG Financial Network. At AIG, one of the things we're striving to do is to help provide financial freedom for all of our clients. And in working with clients, we've kind of noticed a couple things. One is, most of them seem to struggle to keep their financial affairs organized. Would you put yourself in that category?
Oh, absolutely.
Yeah, you're not alone. It just seems to be it's a common issue we see all the time. People just seem to struggle with that for whatever reason. The second thing we've noticed in working with clients is they don't seem to have a whole lot of confidence about what's the right amount of life insurance they should have. Would you put yourself in that category?
Definitely.
Yeah, you're not alone. That seems to be a tough question that people struggle with. So in response to that, we've developed this process called Financial Profiles, and we provide this free of charge for all of our clients and their immediate family members. What I like to do is give you a brief overview of what you're entitled to.
Sounds great.
Make sense? Okay. So let's talk a little bit about organizing your financial life, right? We talked about that. People struggle with that. What we've done is I've got a fictitious family here called Peter and Susan Franklin, okay? And they're a young family in their 30s. They have 2 kids. And normal family. And what we've done here is we've organized their entire financial life on one page. Okay, the page here is called the net worth page. Which I don't know if you're familiar with net worth, but it's your assets minus your liabilities. Okay, Peter and Susan's case, they have a net worth of $191,000, which you really don't want to focus on that right now. The real benefit of this page is we've organized their entire financial life on one page. And what we've done here is we put the last 4 digits of the account numbers of all their accounts. So God forbid if something were to happen to either one of either Peter or Susan, the survivor could come to this one page and handle all of their family affairs. Do you think having something like that would be beneficial for you guys?
Oh, absolutely.
Yeah, it just seems to be something that would be great. Now we talked about lack of confidence around what's the right amount of life insurance, right?
Sure.
So we've done this analysis here for Peter and Susan. It's really called a capital needs analysis, and it takes a look at several factors, okay, that we need to address if there was something were to happen to one of the spouses, okay? So the first thing is we talk about immediate cash needs at death, okay? And really there's several categories that come into play there. One is a final expense fund. This is to pay for funds for medical, legal, funeral, and other expenses that you incur when you do have a death of a loved one, okay? The second one is a debt payment fund. Most people want to have all their debts paid off, particularly their mortgage, okay, cars and all that kind of thing. The third thing is to develop an emergency fund if a family doesn't have one already. Typically we see 3 to 6 months income people want to have set aside for emergencies. And then finally, if there's kids involved, would be to provide money to pay for college education. Does that make sense?
Yes.
Okay. So when we met with Peter and Susan Franklin, we went over these 4 factors, okay? And you see that mapped out over here. So for a final expense fund, we've got $10,000 here. Now, I can tell you from past experience that's probably a pretty low number, but in meeting with Peter and Susan, they felt that that's what they wanted to have in there. And that's the beauty of this plan, is that it's your plan. And so we went with what Peter and Susan wanted to do there, okay? Peter and Susan have $284,000 of debts from mortgages, cars, and all that stuff. They want to have that completely paid off. And they also want to set aside an emergency fund. In this case, this is 3 months of income for them, $31,675. And then finally, they want to provide funds for their 2 kids for college. And that requires $60,626. Okay, make sense so far?
Sure.
If you add these 4 things together, it's $386,684. Okay? That's what we call the immediate cash needs. Okay? Now, we're not done there, because if there's a death of a spouse, you're going to lose income that's been coming in from that person, right? They have a job, right? So we need to look at total income needs for the family. And income needs for a family, generally comes from 4 different sources: Social Security, savings and investments, any life insurance proceeds that may already be in place, right? And then the survivor's earnings that they have. Make sense?
Yes.
What we've done is we've taken these 4 sources of income and kind of mapped them out on a graph here. And what you can see here, and this is a case. In this case, we're assuming that Peter passes away, And Susan is still working. That's where you see this green. Okay, she's got her own job, and then she retires, and she has a pension from her current job. And that's why you see this green going out there. Make sense?
Yep.
This light yellow here is actually income from Social Security. Okay, I don't know if you're aware or not, but if somebody were to pass away and while kids are still under the age of 16 and 18, there's a couple things there. Social Security does pay income to that family, so you can see income would come in here, and it drops when one kid hits a certain age, and then it disappears, okay, and then it picks back up again when Susan retires, and that's this is her retirement Social Security income right here. You can see here from this analysis that the income that they want to have for their family, it's just not enough, and that's why you see this red here, okay. And working with Peter and Susan, they said they wanted to have 70% of their current income if something were to happen to either one of them while the kids were at home, and they wanted to have 50% of their current income after the kids were out of the house. Does that make sense?
Sure.
So we tailor that to the person. I mean, those numbers could be different for you, but in Peter and Susan's case, we've got this shortfall. So if you look at how that maps out, remember we had the cash needs of $386,684 from above. To provide the income that they need an additional $329,650 of assets of some kind from somewhere. Okay, now less present funds. So they've already got $272,000 that would be available to Susan if something happens to Peter. This is a combination of both savings and investments and life insurance that Peter already has. Does that make sense to you?
Yes.
So if you subtracted that out, what this is saying is, God forbid if something happens to Peter, Susan would need another $444,185 from somewhere. Okay, and typically the best place to get that is through life insurance. So, for Peter and Susan, if they had this $444 of additional life insurance, it would guarantee that the cash needs would all be taken care of, and it would guarantee that there would be no red here in this analysis. Okay, we do the same thing. If something happens to Susan and vice versa for Peter, you can see the numbers. It's a little different here because each situation is different. Let me ask you a question. Do you think this makes a logical sense about how to address what's the right amount of life insurance?
I would like to have something like this.
Yeah, I mean, so it's very logical of how to do it, and it takes the guesswork out of what's the right amount. So what I'd like to do is go through a bunch of questions with you, ask you a lot of questions around your financial life, and I'll be able to come back and be able to tell you exactly what you need in terms of life insurance based on the goals that you want to accomplish. And I'll come back in a week or so, and we'll go through this entire booklet that'll be mapped out for you. Does that make sense?
That sounds great.
Okay, fantastic.
Thank you.